Hi, everyone. What you're about to see is an expanded webinar we did in CPA Academy called Amazon Accounting for QuickBooks 101, sponsored by ConnectBooks. I'm here with my friend Nakham from ConnectBooks, and we're going to talk about how does Amazon accounting work, just in general, just e-commerce accounting. How does that journal entry work in QuickBooks if you're going to do it manually and just take the summary of the information? And then finally, how to use a third-party app like ConnectBooks to automate these things, because God knows we got to automate these things once these e-commerce companies grow. So this was originally a 1 hour webinar that we only were able to cover some basics, but later on we came back and we recorded an expanded version of Nachman presentation, so we made it much longer. I guarantee you that if you're getting into the world of e-commerce right now, if you're starting to learn from it, there will be no other video, no other webinar that will get you as much information as you need to get started and sort of build some confidence that there is a pathway to getting started with e-commerce accounting. So with that in mind, let's get started. Welcome everybody to Amazon Accounting with QuickBooks 101 and my friend Nachman Laser. He's the founder of ConnectBooks. He's an absolute expert in the world of Amazon. Like any question I've ever had as a practitioner dealing with Amazon clients, I've always had to contact Nachman and go, hey, what the heck is going on here? Because Amazon is its own huge, humongous world and ecosystem. So I'm very glad that we paired up to deliver this presentation for you. So this is the stuff that we're going to cover. We're going to cover how Amazon settles. That's kind of the most important thing. So money gets dumped into the bank account of the merchant. How in the world does that dollar amount get calculated? And how does that, or how or what matters in terms of all those numbers and all those pluses and minuses when it comes to actually booking it in QuickBooks. Now, when you go book it in QuickBooks, and this is whether you use QuickBooks Online or QuickBooks Desktop, we're going to use QuickBooks Online for context. That's the only sort of application that we're going to use as an example. But it should be the exact same process and the exact same decisions that you need to make, whether you go with one or the other. Now, I will venture to say that if you're working with QuickBooks Desktop, especially QuickBooks Enterprise, you are probably a lot more inventory inclined than if you're using QuickBooks Online. So even though we're going to talk to you about the to inventory or not to inventory conundrum, whether to use a journal entry or a detailed sales receipt or invoice, it should be the same concepts, whether it's desktop or online. And when it comes to inventory, it's also the exact same contents, believe it or not. Then we're going to talk about the Amazon summary report. So this is the information that Amazon sort of gives you, how to read it, how to read more into it. Again, what matters, what doesn't matter. Then we're going to talk about making the decision as an accounting professional consulting with your e-commerce clients. You have to make this decision almost for them. I mean, I would venture to say that it's best if you do it with them, but you might have to do it for them because there's a really high level decision, which is, do we enter a summary of the sales or do we enter details of the sales? And there's pros and cons to either one. And then we'll open it up for Nachman to do the ConnectBooks demo, so you can see how a third-party app can help you with the entire process. So first half of the webinar, no app. Second half of the webinar with the magic of an app, okay? So hopefully everybody, we're on the same page here. Now I'm gonna run the first polling question. I just wanna remind you that if you wanna get your CPE certificates, you have to answer at least 3 out of the 4 polling questions. Give me a general idea where you are when it comes to inventory. What is your experience? Do you just get the kind of the theory? Have you worked with any e-commerce clients? Are you sort of experienced working with a lot of them? Of course, this is a 101 class, so we're going to make the assumption that most of you are just getting started. And I would love to know just put it in the comments or in the chat or in the questions. I would love to know sort of like, why are you learning about e-commerce? Like, why do you feel it's important for you to learn about e-commerce? Because this is going to be a big investment in time. A 1 hour webinar is just going to get your feet wet. This world is huge. I've been dealing with inventory for a very long time. And because I deal with inventory and manufacturers, I stumble upon e-commerce clients here now and there. I'm not an e-commerce expert at all. I do have several clients on e-commerce that I have served in the past. And this webinar is sort of a summary of all the hiccups and all the things that I've stumbled upon while trying to figure out how to help my clients with inventory and e-commerce. So I would love to know, again, in the questions, chat, comments, like what drives you to learning about e-commerce. Okay, so we have about 88% of the votes. We'll leave it open for 5 more seconds. Again, first polling question is up. 5, 4, 3, 2, 1. Polling question is done. Okay, polling question number 1 is done. Okay, so let's start by first thanking ConnectBooks for making this webinar possible. ConnectBooks is an app, it's a third-party app. It can connect to QuickBooks Desktop or to QuickBooks Online. And its purpose is to automate the e-commerce entry. So sort of the opposite of what I'm going to show you. I'm going to show you how to manually do it so we understand the accounting principles. And then you're going to have to make a decision depending on how big the customer is, how much volume, how many transactions you're entering, how many channels. Is it worth it for you to make manual entries versus using a third-party app to automate this process? Okay. ConnectBooks works with Amazon. Primarily, ConnectBooks was born as an Amazon solution, but it also works with Walmart.com. So what you as a merchant can sell through Walmart.com without having to have stuff at the Walmart store. So it's almost like an Amazon number 2. It works with eBay and it works with Shopify. And Shopify is its own mini monster because that's all sort of self-merchant, especially when it comes to sales tax and that sort of thing. We'll discuss some of these concepts, but we're going to be focusing mostly on Amazon. ConnectBooks can do either a summary journal or it can do detailed entries, and it's up to you. You're going to be able to choose how you want to do it, and after you finish with this webinar, you'll understand, what are the type of clients that you're going to choose, one or the other, because it's a big decision you make at the very beginning. Although you could swap back and forth, but in terms of workflows, it's sort of one or the other. Okay. It can also automate the cost of goods sold calculation without you needing to track inventory in QuickBooks. I cannot emphasize how big this concept is, because ideally, especially someone like me that's been dealing with QuickBooks for 15 plus years and focusing on inventory, I would love for every small business owner to understand how to manage their inventory correctly in QuickBooks. The problem is most of the times their businesses grow much faster than their skills, accounting skills, and their administrative staff doing things in QuickBooks. So inventory becomes a mess. So many times accountants, fellow accounting professionals, make the decision to convince the user, hey, not worth it for you to track inventory in QuickBooks. Let's use non-inventory parts or not even track items. And then we'll use some other app that, to track inventory just because it's just not worth it. We have all the books are clean, all the ARs are clean, all the APs are clean. And then you have one random valuation entry and one volume cost of goods sold adjustment that's throwing off your entire P&L. So it's really worth it to have inventory in QuickBooks. So again, some cases is, some cases isn't. Now, this app is an additional investment. You're going to pay anywhere between $25 for the sort of the basic reports only version of the app, all the way to thousands of dollars, depending on how big the merchant is and how many channels it has and how many transactions. And I'm very excited. I've been helping Nachman put this thing together. Hey, where is the e-commerce training out there? There really isn't really good e-commerce accounting training. So I convinced Nachman and the team at ConnectBooks that they should have a certificate program, and they've been working with this for a couple of months. And I think Nachman will talk about it at the end. They're coming out with a QuickBooks e-commerce accounting certification course. So I'm very excited about that. Check them out at connectbooks.com. We will have Nachman do a demo of ConnectBooks. Okay, so enough about ConnectBooks. Let's talk about QuickBooks Online, and let's talk about Amazon. Let's talk about e-commerce. So you may have noticed that, and I'm going to switch to QuickBooks really quick. You may have noticed that in QuickBooks Online, let me just refresh the screen for a second. You may have noticed that there's a tab that's called Commerce. Okay, so there is a built-in sort of e-commerce solution inside QuickBooks Online. This built-in solution comes after QuickBooks Online acquires two companies. One is called SaaS something. I forgot what the exact name is. SaaS Corp.
SaaS and TradeGecko.
Yeah, so they acquired TradeGecko and One SaaS. That's what it is. So they tried TradeGecko and One SaaS, two separate companies that were third-party solutions to help people work with their e-commerce and QuickBooks. And Intuit has been struggling, and I'm going to say that up front, they've been struggling to truly integrate these apps into QuickBooks Online. I have seen some level of success where people connect their Amazon, Shopify, or eBay account to QuickBooks Online, but it needs to be very low volume, maybe 20 or 30 transactions a month, so you can manually make sure that the entire information, the entire amount of transactions are being downloaded, because I found that it doesn't download complete transactions. Okay, it has sometimes, and we can't find the pattern. Sometimes refunds and credits are missing. I guess large volume of transactions. Sometimes it misses like part of the sync. It gets unsynced when the transactions are very long with sort of a lot of line items. So it's a big challenge, especially with tracking errors, because sometimes this could happen where you would have an error on the download. Some transactions didn't download, or whatever the error is. You could have and you don't have a log where you can actually go in there and kind of see what didn't sync. So these are the reasons why I proactively do not recommend the built-in e-commerce solution for QuickBooks Online clients that have, again, anywhere more than 20 or 30 transactions a month. I wouldn't recommend it. I find it to be a complete waste of time right now. I'm not saying it never will, but right now it isn't. And the kicker here is the first bullet point you see here is there no cost to goods sold tracking. Even if you have inventory items inside QuickBooks, the QuickBooks built-in e-commerce solution will not post to the specific inventory items. It always posts to sort of generic non-inventory items. So that could be a good thing. That could be a bad thing. I just want to sort of let you know up front that we're not going to cover, or I don't want to waste your time with the built-in e-commerce options, because they're just not functional. They're not useful. Okay. So let's talk about how Amazon settles, or the net deposit, how Amazon settles the payout to their merchants. So essentially, and Amazon just kind of picked this cadence for some reason. They've been doing it for like 15 plus years. It's every other week. So, for example, the sales between July 28th and August 11th, they're going to be settled the day after that 14-day period ends, and it would be August 12th. So it settles right after. So when you run a report for that period, for that settlement period, you're going to see all the sales for that period. Now, keep in mind that Amazon does not respect or care for natural calendar months. Like Amazon cares very little that the fact that you care about your July financial statement and your August financial statement as being two separate things. So they do settle every 2 weeks, whether or not it crosses months. And that's a key issue. It's a key challenge for merchants, especially the ones that track sort of month to month sales. I mean, the merchants that don't care, that just track everything in 2 week increments, fine. But I've never met a business owner that kind of runs in 2 week increments. It just doesn't work like that. People work per week, or people work per month, or per year, per quarter, sort of natural calendar um, uh, 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 measuring sticks, right? So the way the settlement of the net amount comes in is you get the gross sales. It's everything that you sold through Amazon, plus the shipping sales. Believe it or not, some people still charge for shipping and still make some money on the shipping. Although for the most part, most people do Amazon Prime and then free shipping and that sort of thing. Minus refunds, of course. Like there's you get a refund of a sale, that they take that out from your settlement. Minus shipping costs, so all the costs that you're paying Amazon or Amazon shipping affiliates to ship the product, whether or not you're charging for shipping, someone's paying for shipping, and that's you. The Amazon transaction fees, Amazon charges a commission, and then there's even inside the transaction fees, there's a plethora of different things, and maybe Nachman can kind of discuss the challenges with that. So only like an Amazon nerd like him actually gets into like, okay, what's inside the transaction fees? But at the end of the day, that's the stuff that a lot of clients want. They want to know, wait, what exactly am I paying Amazon for? And they want to break it down, and you have to kind of understand how to read the reports to understand what is being charged. Then you're going to have FBA fees. So when you have fulfilled by Amazon, which basically means you're outsourcing your warehousing to Amazon, they're going to charge separate fees for that, separate fee schedule. And then they charge monthly fees, per transaction fees, inventory holding fees, all sorts of things. And then any other fees that are that pertaining to like ads, when they bump up your product in a sort of like sponsored listing, promos, rebates, special discounts, all that stuff will be netted from that. And if there's foreign currency, so let's say, for example, you have a store in Canada or Mexico, and then you settle the money in US dollars. Okay, Amazon has to also charge you to exchange that money, and there's a fee for that. So you gotta keep aware, they'll deduct that from the settlement. So in a normal situation, those will be it. But then, of course, none of our clients are ever normal. You're gonna have two other variables. One is gonna be the reserves. So the newer merchants don't get their money right away. Amazon withholds some money and starts releasing them, maybe on the next payment, in some cases in the next couple of payments. So you're going to see all the activity that's reserves withheld and reserves release, and that's going to be part of the settlement. And of course, you're going to treat all that stuff in a current asset account. It never takes more than a year, so it's always current asset account. And then you're going to have the Amazon loan. So every once in a while, when an experienced merchant has been doing a lot of activity, Amazon will say, "Hey, do you want $10,000?" And then a lot of people say, "Yes, sure, I want $10,000." And usually these are usually short-term loans, less than a year, and basically they fund your account through the settlement, which is really interesting. Like it's not like a separate payment and like it would be nice for that, but no, through the settlement, and then they take the payments from the settlement as well. So you see all the pluses and minuses pertaining to the loan, and that would be a current liability. Okay. Now, one thing is the interest of the loan itself, it doesn't get broken down in the settlement. So you have to look at different reports to book the interest. So just you take the payment that they took from the loan, you post it to the loan, and then at the end of the month or the year, you just figure out what the interest was and post that to make sure that your loan balance is correct. And then after all this is said and done, right, we cross our fingers, the net settlement actually matches the bank deposit. So big story to tell to get you to the point that, okay, how in the world does this stuff work? This is it. Like this slide it's the 101 class that you need. Once you understand this, then you understand how to go backwards and sort of reverse engineer this thing. Now I want to add some notes to this. I love that the Amazon settlements matches the bank deposit. Okay, so they're very easy to match the bank to. One of the challenges that I have, and I mentioned this earlier, is you will not get a settlement split by month. Okay, so every settlement's every 2 weeks, and even if it contains some July and some August, hey, tough luck. You would have to do manual adjustments to that, make a journal entry by running a customized sales report, month A, month B, and then figuring out the transaction fees for month A and month B, and then make a journal entry and kind of like move these things around. Yeah.
Just to add in that at the end of the year, Q4, this gets very complicated because when you overlap in December into January, you need to record the sales properly at year end to match Amazon's 1099. And then also what happens is Q4, most sellers do probably, I would say, 10 times their normal volume. So you're going to have this huge deposit hitting your bank account January 2nd, which 98% of that has to be accrued to December. So when they want to do proper accrual, they want to see the sales and all that in December, not in January.
Yeah,
so Q4.
So it's interesting. It's interesting. Two things are happening. We're crossing a year, and second, most merchants sell a lot more in December than they do the rest of the year. So it's not just a problem with the numbers not being phased in the right month. It's typically a really big number. It's a really big sort of material change if you were to ignore it. So good add-on then. Thank you so much. See, that's why Nachman is the guru of Amazon accounting. Anyway, the no cost of goods sold information. Amazon will not send you in that settlement information about cost of goods sold. You will have to run a whole bunch of reports, sales by product, and then compare them maybe with a VLOOKUP or something, compare them with your average cost, and then you would have to do your own sort of manual periodic inventory entry. And then even if Amazon were to do something like that, where you log in the average cost of goods sold, so you get an idea for what the cost of goods sold is, Amazon doesn't have a system in place that can sort of like respect FIFO or respect changes of cost over time. And in the past 2 years, this has been a humongous problem because obviously inflation and changes in cost has really skewed, like a lot of merchants think they're making money and they're not because they're still catching up to all this inventory at a higher price that they're buying. So like in the books, maybe they're making money, but when you take into consideration the changes of the cost over time of the product, that could be a big issue. And my biggest challenge is the limitation on Amazon expenses. Like you have to pull separate reports to try to figure out how to break down those expenses, the Amazon expenses themselves. Okay, all right. Quick note on sales tax. This is a big one. People ask us about this all the time. Amazon went through a transformation from 2017 to 2022, I believe, or 2021, I believe, where they essentially got every single state to be a reporting state for Amazon. So Amazon collects the sales tax, Amazon remits the sales tax. That's amazing. We don't have to deal with that stuff. But this is going to be different when you're dealing with Shopify, for example. Shopify won't do this. Okay. eBay does most of the states. I don't know. They do every state. Walmart.com probably does all the states. I don't know. Nachman, if you know, let us know. But you no longer have to deal with sales tax management in Amazon, which is a great thing. So again, Walmart and eBay work just like Amazon. They collect and remit the sales tax, but Shopify requires you to remit your own sales tax. So deposit settlements will, the Shopify ones anyway, will include the sales tax collected. Now, one thing that Nachman told me while we were preparing for this is, look, even if Amazon and Walmart and eBay file the sales tax return, you are a sales tax merchant. That means you should register in the state to collect sales tax, even though you're not collecting it. And you probably need to do that anyway to get your sales tax certificate so you can buy without paying sales tax. So you still would have to submit a zero return, not to get the penalties for not filing. So just because Amazon is managing sales tax for the transactions that are being sold through Amazon, it doesn't mean that Amazon is managing your sales tax obligation and compliance through the state related to your legal entity. So I think that's a really good add-on. Nachman, I'm pretty sure you got hit with tons of clients and that were surprised by this, and that's why you said make sure you mention that. Good point.
Wait till the penalties come in the mail.
Right, exactly. And of course, they're always going to blame the accountant for the penalties, right? The accountant, oh, you didn't tell me, so that's, so you kind of have to, like, if you're going to deal with customers like this, you're going to have to know these things. Okay, this is a perfect spot to do a second polling question, and we're going to talk about the importance of inventory and cost of goods sold and other stuff a little bit later on. I want to know, what is your preference when it comes to tracking inventory in QuickBooks? Like, do you like to manage inventory inside QuickBooks, or you like to avoid managing inventory uh, inside QuickBooks? Okay, so like, what's sort of where are you in this inventory conundrum? So polling question number 2 is up. I'm gonna leave it up for about a minute. And Nachman, was there, while we do the polling questions, was there something that maybe I didn't cover in those couple slides?
Oh, no, you're going perfect.
Okay. All right. So there's a question here that says, will this work with Xero? So Xero is a competition of Intuit. So does ConnectBooks talk to Xero?
Yeah, it's in progress. It's
Okay.
not live yet. We hope to have it in Q1 of 2024. Very possible still might have it in 23.
Okay. And Jeff is commenting, hey, if you're using Shopify and you're managing sales tax, use Avalara because they're the best in managing sales tax returns. Thanks, Jeff. So Avalara, check them out. They're really good to manage sales tax. There's also for Shopify, Nachman, which other apps have you worked with? There's TaxJar. Is there?
Use TaxJar, but Shopify themselves also has very good reporting on sales tax, meaning Shopify has their own built-in module that people can use. But what I found is that people who are on Amazon and they're not on Shopify, they think like, oh, they're off the hook with the sales tax. And that's where, the blank return was very important for them to know that they need to keep an active resale certificate for their purchases, and they still need to file, even if, Amazon does everything.
Exactly. So even though if you do 100% sales through Amazon, this is the confusing part. If you do 100% sales through Amazon, that means you don't have to deal, quote unquote, with collecting or remitting sales tax. You are still a sales tax collecting entity. You're still a business registered to sell products. And in order to buy the products without paying
Right.
for sales tax, you need a sales tax certificate, which requires you to register through the state, which requires you to file a zero tax return, even though Amazon is managing the sales tax for the Amazon specific sales.
Yeah, that explains it.
Yeah, exactly. All right. So thank you for your answers on the inventory question. We will talk a little bit more about inventory as we go. Okay, Amazon reports. So let's take a look at what the Amazon reports look like. So when you go to sellercentral.amazon.com, you're gonna go to the payments dashboard, and you're gonna click on statement view. Okay, when you click on statement view, you get this beautiful graphic. Okay, that is so beautiful that it hides the fact that Amazon takes half of your sales of your commissions. It feels like that, right? It's almost like, hey, look how pretty this graphic is. Well, we take half of your income anyway. So they have these beautiful reports. They are really beautiful. I love the way they're configured, and they're very easy to read. Especially from a small business owner perspective, they're just a little bit challenging to understand from an accounting point of view. So all the blue lines are basically your money coming in, or what represents income, revenue, and all the red stuff is what represents expenses, or money coming out. You see the Amazon fees are obviously the biggest chunk of this. FBA fees could be even bigger, especially if you do a lot of FBA. This particular merchant, doesn't do as much FBA, so obviously you don't see that big number. But I've seen that FBA
No,
percentage.
you got it in the bottom, the expenses.
Yeah, yeah, exactly. So the total proceeds, the total sales for this particular merchant for that 2 week period, 7/28 to August 11, that it's going to get a settlement on the 12th, the next day of this report, for 99,978. Okay, it was $186,000 in total gross sales, and when you net out when you add shipping income and other income and expenses that have been refunded, and you take out all the refunded sales, right, the stuff that was returned by customers, and all the expenses by Amazon, it ends up at 99,000. So when you actually do break it down, it feels like it's almost half, right? I mean, it's not the exact formula. So, like, a lot of my clients tell me, should I sell on Amazon? I always tell them, look, prepare that whatever sales price you're thinking about selling this for, about 40% goes to Amazon. And that's not a fair number to say, because it's just more, there's more things in that expenses. But I think just spiritually, like, if you're used to selling something for 100 and keeping 100, it doesn't work like that anymore with Amazon. You sell something for 100, you keep 60. Okay, and then you have to use that 60 to pay for the cost of goods sold. Remember, cost of goods sold is not here, and this is one of those things that people go, well, that's fine, that's still plenty profitable, right? I mean, 60% profit. No, 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 that's transaction fees. Keep that in mind. That's transaction fees only. Then you got to figure out what cost of goods sold is. So as a general rule of thumb, if you don't have at least 4 times the cost in the sales price of the product, you're not making a dime. Okay, at least, right? So if 40% go to Amazon, you got to have the difference between 25% cost, and so you got to be at least a 75% margin, I think, to have any sort of profitable business through Amazon. Okay, because on top of that, you also have to deal with packaging and all that stuff. Like, you still got to get the product to Amazon. I mean, there's still manufacturing and boxing and all that stuff. I mean, there's tons of work that goes behind that. Okay, then if you have a situation where there's a reserve, you will actually see sort of a one more line under it that will say actual reserve, account reserve, level reserve, and basically $35,000 got taken away from this net. Okay, so otherwise this net would have been 60. This is different period. 35,000 is being taken away. That means will not expect those $35,000 to come in this settlement. They will get resettled the following month. Okay. Now, inside of this report, if you want to see details, you will see that some of these numbers have underlines on them, have a little link on them. If you click on every single one of those, you get this little details box where you could break it out even further. So if you can make a journal entry, and I'm going to show you how to do a journal entry for this, without the details, or you can go one step further and sort of click on each one and get the details. I hate the fact that there isn't like a button I can press. You can expand them all and see them on the same graph. That's the part that really annoys us. That's why we use third-party apps to facilitate the process. But you could go a little bit deep, sort of in depth into any of these if you wanted to. Okay. Now, when you deal with multiple currency, the reports will look the same. Okay. A lot of times there's no FBA in Mexico or Canada because it's more limited. So you're going to see it's going to look a lot simpler because most of the times on different countries, it's just harder logistically to get all the things that you get in the US. So the report looks a little simpler, but then everything will show up net in the foreign currency. And then all the way in the bottom of the report, when they convert the 100 pesos to $6, it tells you how it converted. It doesn't tell you the conversion rate, which I kind of hate. I wish it told me next to, hey, by the way, we used this conversion rate. So if you let QuickBooks do the conversion rate for you because you do everything in multi-currency, then QuickBooks might have a different number than $6.43, and then you manually have to make an adjustment to foreign exchange rate expense or something like that to adjust that. So it all depends on whether or not you yourself manage everything in multi-currencies or single currency. Look, if you don't manage multi-currencies in QuickBooks and you have a store in Mexico and a store in Canada and a store in Australia and a store in the UK, it doesn't matter. I would just put all the entries in the US equivalent and then just move forward because it's just too much work to put in a foreign currency and then deal with the conversion exchange from your QuickBooks to, from what Amazon shows you. Nagman, anything to add on that?
Yeah, I would say this is just in the beginning, meaning usually smaller sellers will have Amazon do the exchange. Amazon charges a fee. They hide it in the exchange rate like all the banks do. So they charge a fee to do it. And what happens is when you start, let's say, to sell in the UK and you start getting disbursements in the range of like $30,000, $40,000, what I see is people sign up for, they call it virtual banks, and they tell Amazon, hey, don't do the exchange for me and put it into my virtual bank. And that's when it will be way more difficult, to pull in the data. You probably will need to go onto multi-currency at that point. But as long as Amazon does the exchange, I'm fully with Hector not to have the multi-currency and just take all this, convert it to USD based on the exchange rate, and then just do your entry.
Exactly. Like if you're not buying a foreign currency anyway, if you're not banking in foreign currency, why even bother? These are the little tiny sort of like tricks of the trade that you kind of discover over time. Now, if you were to I'll go back for a second, you're going to see all the way at the bottom it says print statement. There's two really important links in there. You got print statement and you got view transactions for the period. So print statement would be something that looks like this, which essentially is my template. Like this essentially becomes my template for doing a journal entry, and I'm going to show you what my template looks like. And you have a link to the template. You can freely access a template in Google Sheets, download it, do whatever you want with it. The template that I use to then to load the journal entry. So I'll print this next to me, and then I'll have my cheat sheet next to me. Use my template so you know exactly where each of these things should go. Okay. And then if you click on the transactions view, you're actually going to get order by order. You're going to get every single order with an order number with the actual product. You're going to get the sales price of the product. You're going to get whatever discounts were taken off the top, the Amazon fees, and any other adjustments. So the column all the way in the bottom that says total is the one that's going to be sort of matching at the end what the total net proceeds that you're going to get. So this will tell you, this is basically like a statement, okay, even though it's a transactions view of the statement, but it's a statement that explains how Amazon arrived to top number to bottom number. And if you need to explore any specific transaction or whatever, you can do it from here. Now, let me tell you why this report is important. You will probably not be doing anything with this accounting wise, okay? However, a third party app can do something that accountants really can't unless they take hours and hours and hours to reconcile this thing, which is a third party app can take, instead of grabbing, let me go back for a second, instead of grabbing this and doing a journal entry, they can actually grab this and do, imagine a pivot table, okay, where every single product or product type, product category, product group, however you want to see it, every single product has its own fees. And it's possible that some of your products have free shipping and some don't. That's going to be significantly different in terms of measuring profitability. Think about that, right? Because you might think of your store holistically as a store where, well, you win some and you lose some, and at the end, we just want to make sure we're profitable at a store. Sure, I have nothing against that train of thought. Problem is, how good of decisions can you make about should we keep this product, should we replace it, should we phase it out, right? Is this obsolete? Is it worth doing a fire sale? Should we sell somewhere else? I mean, this is the bread and butter of e-commerce management. What makes the difference between a big boy e-commerce store and a little mom and pop with a side hustle is understanding which products make money, which don't, and making decisions on buying and new products, not buying new products, entering new SKUs into Amazon. So being able to know what your expenses are, your Amazon expenses, your transaction fees, your shipping costs, all that stuff at the product level is something that gives you a much higher level of insight that one journal entry can do. So true, for the accountant, it's better to do the simple journal entry. For the business owner, it would be good to know, hey, which of my products have less gross margin than 30%, 20%? I need to start taking a look at those. So what a third-party app can do is essentially download the entire database of products and then re-summarize it for you in whatever cadence you want to enter into QuickBooks. So this is where we make the big decision to go, should we go summary or should we go detail? So if you were to enter details on your own, so if you were to say, you know what, I don't need a third-party app, I want to go into QuickBooks and I want to enter all my product quantity details, you can do a couple things. One, you can take your sales for a particular week, a sales for a particular month, a sales for the 2-week period, like Amazon does it, you're going to sync it 100%, and you can do a single invoice or a sales receipt. And in there, with a simple pivot table, you can grab your transactions report and know exactly how much you sold gross for all your items. You could even just say, you know what, screw it. I don't even want to know what the gross is. I'm just going to enter a net. You can do that too. With a big pivot table, you can do that. Enter net for all the items. I suspect that you want to see the gross amount and then you want to see at least transaction fees, maybe not even at the product level, but transaction fees at the overall level, at least per channel. So you could essentially break down your transaction costs at the product level or transaction costs at the period level, and then figure out how you want to enter that, but still retain sort of detail, quantity, and product information in QuickBooks. This is whether or not you have inventory. Like, so you see product 1, product 2, product 3. They could be non-inventory parts or they could be inventory parts. That's up to you. That's another important decision you have to make when it comes to inventory workflows. You could also do even like a daily sales, okay? And it's an example of where you can do a daily sales and include the fees in the transaction. So imagine you put in the product and then you put all the expenses in negative, right? And you can have different items point to different GL accounts, and you can do basically one big invoice or one big sales receipt. And you could choose any cadence you want. You want to do it weekly, you want to do it monthly, you want to do it daily. You can do that with the detailed reports by doing a pivot table. I won't bother you with that because I will take a whole hour. But I think you can imagine the process of how you would put something like that together. You could also, this is just an example of something, just more of a sort of a a higher cadence, a daily invoice. Okay. And there's sort of a big question here, which is, should I do a sales receipt? Should I do an invoice? This question comes up all the time, every time we talked about this. And generally, they're the same thing. But if you want to match the payments to the bank, then you want to do an invoice, because then you can pick whatever cadence you want for invoicing for your sales reports, daily, weekly, monthly, and then just tie your payments to those invoices. Where if you do a sales receipt, the challenge with that is sales receipt brings the money straight into your GL. So you have to use a clearing account after to then bring all your sales receipts to a clearing account, and then all the deposits have to come in through that clearing account, and you have to reconcile those payments and deposits separately to make sure that you didn't put an extra transaction or you're not missing a day worth of sales. Because remember, QuickBooks is never gonna like tell you, hey, you missed Tuesday. Like, it doesn't work like that. Like, you have to look at it and make sure you didn't miss anything, especially if you're not automating this with a third-party app. So let's talk about how to enter this stuff in QuickBooks. So like this was the background for you, sort of everybody be on the same page, understand like sort of the enormous amount of information that we have and like the decision we have to make on how to enter it. And essentially what I want to tell you is this is the best way that I think you could do manual e-commerce accounting in QuickBooks, again, without the use of a third-party app or their built-in e-commerce system that doesn't work. So one is start from the settlement or the deposit, right? So like you need to know that the dollar amount that's in the bank is going to match your entry. If you do a single journal entry and you match it to the exact same cadence that Amazon pays, so that every 2 weeks, you can stop there. However, If you want to not do a journal entry, do an invoice or a sales receipt, then what you want to do is you find the one settlement, you're going to send it to a clearing account, and then you're going to find each of the payments or each of the sales receipts that match the settlement, go into that clearing account, and that clearing account should always zero at some point. Okay. And then if there's an invoice, obviously you want to apply those payments to the invoices, right? If you have a sales receipt, you don't have to apply payments to that. So when we go enter detailed transactions into Amazon, we're going to make the decision of cadence. So we're going to do an invoice or sales receipt weekly, daily, sale by sale, and that's kind of crazy. But like, especially with high volume, QuickBooks is going to blow up, within a month if you enter every single sale by itself. It would be nice. I mean, for reporting purposes, it's a super cool idea, but QuickBooks won't last you very long. It will get too slow. It will be unmanageable. Both desktop and online, same issue. So we're going to pick a sale by sale, a daily summary, a weekly summary, a 2-week summary tied to the settlement, obviously the easiest, but like Nachman said, it's going to be a humongous problem, Q4, and they're every month, which is what a lot of people do. With the exception to the one where we do every other week, okay, you're gonna have to also enter separately the expenses somewhere. So you're actually gonna go into the sales receipt or the invoice and net out the expenses in negative. Or you can do that separately too, but usually we do it as a net to simplify it. Or we're gonna run invoice and payments to a sales receipt to the clearing account and put the fees inside that clearing account. So imagine that clearing account being a bank account and you can throw the fees in there. Either one works. You net them on the transaction or you put them on the register separately. Okay. Now the big debate of invoice versus sales receipt. I think that we covered this already, right? So like an invoice will require a payment. If you can match one payment to multiple invoices, where a sales receipt, you would have to use a clearing account. That's the fundamental difference. So if you were to sit down with someone and say, hey, let me explain to you what the pros and cons of each is. In summary accounting, let's just call it journal entry, it's going to be super easy to match the bank. We won't get COGS. We won't get periodic sales accuracy as issue with the years and the quarters and the months, and you will not get detailed product sales in QuickBooks. So you have to use a different tool for that. If we go detail accounting, where we include the actual items, we would, like I said, we would probably need a clearing account so we can match those payments, the multiple payments that add up to the sum of the entire 2-week period with the payments. But with item details, QuickBooks can essentially calculate COGS, whether it's on every transaction, whether it's daily or monthly, the movement of the inventory, whether QuickBooks will calculate the cost for you. And you could also do a detailed product sale. So you want to see in QuickBooks your sales by product. It's very nice. And if you have multiple channels and you're using QuickBooks to kind of track sales across multiple channels, and somehow the stuff that comes through eBay and Shopify, you still use the same items, and you have item mapping across all the channels, which is very difficult to do, very doable, but it just takes a lot of work. You can have this beautiful cross-channel reports with classes and stuff like that. I mean, I think it's an e-commerce accountant's dreams come true. Very difficult, but it is possible. And the Amazon fees will require a journal entry because you're doing detailed line item accounting. So either a journal entry or a net in the transaction. So that would be like, okay, the high level pros and cons of each one. So let's talk about what this looks like in QuickBooks. So let's jump out of there. So it was a 45-minute foreplay to get to the point where we can see a journal entry in QuickBooks. I know everybody here was logged in so they could see a journal entry because that's the most exciting thing in the world is, let's take a look at Hector's journal entry. Okay, so what you're seeing here is a journal entry. And let me see if I think it might be helpful if I just split this up, maybe do a split screen, do something like this. Okay, let me see. Let me just do something here real quick. If you guys can, I mean, if you're following along sort of live, my strong recommendation is take a picture of this so you can sort of see it in front of you. So take a picture of the summary journal. I have 2 screens, but in a webinar format, we can't do 2 screens. Take a picture so you can follow where all the numbers are. And then essentially, when you do the journal entry, I like to start with the easiest thing, which is, okay, what hit the bank? Okay, that's easy. Like for accountants, like we can track that at least. So that's perfect. And then in the description, I like to put the same sort of text that you see in the Amazon report, just because it just makes it drop dead easy to sort of follow. If later on you're sort of auditing this and trying to figure out if you're on the right track, I like to put the description right there. Okay, then the debits and credits, of course. So money that the net money that goes in the bank, that's going to be a debit, and then everything that's a sale, like gross sales, shipping sales, this random three cent thing that's in there, and then other income, which again it doesn't the report doesn't tell you. So essentially, I created an account in my chart of accounts that matches each one. And now in this specific example, and again, you maybe you want this, maybe you don't. I created a parent account called Journal Settlement just because I do multiple demos in this QuickBooks file. So it makes it just easier for me to know where all my accounts are. But in the real world, especially if you only have Amazon, you actually don't need to have a parent account for that. You can just have these as sort of single standalone accounts. Okay. So that's what the journal entry looks like. All the expenses are going to be on the debit side. All this stuff it will obviously match. And this works perfectly. But again, the big challenge you're going to have with this essentially is that you can't split the month. I mean, if you to split the month here, you would have to do so much work, doing manual reports. And then lastly, if you do something like this and you don't track inventory items in QuickBooks, you would probably use some sort of formula like 60%, 40%, whatever, to make adjustments to inventory asset and cost of goods sold, and then manually at the end of that period, book your cost of goods sold. Then you're able to see the P&L, and this is the P&L from the QuickBooks file that I showed you, the journal entry. This is the exact same thing, and this is how we translate the information on the Amazon report, which is this report, into the profit and loss report. Okay, I'm gonna pass it over to Nachman now. I'm gonna stop sharing my screen so he can do a quick demonstration of ConnectBooks. Did I fail to mention anything in particular while the polling question is still up?
Hi, everyone. Thanks, Hector, for the introduction, and thanks for really running through the webinar and getting so detailed and explaining everything about Amazon accounting and what people really need to know and what people really need to do in order to have proper books and proper accounting records. So as we begin, we will start off go through what Hector discussed, and at the beginning, Hector had a slide here of automating the journal entries. So a settlement is net of gross sales, shipping, refunds, shipping cost. We have Amazon transaction fees, we have FBA fees, and we got other fees, which is marketing, the foreign exchange, then we got reserves, and then we get the Amazon loan. So let's dive into all this. So using a software, and especially one like ConnectBooks, having like a cheat sheet, which Hector showed, like how to do the chart of accounts and, how to remember every, which account goes where and how to like kind of go through the whole journal. With ConnectBooks, it's all automated. So as you see here, this is a list of the chart of accounts. It's a screenshot. There's a whole long list of probably close to 100 different type of fees that Amazon has. And in each chart of account already, ConnectBooks has a pre-filled what we want it to be. Now, you can also override it, and this is like a one-time setup that you do where you can decide whatever chart of account you want it to be. So, for example, Amazon fulfillment fee, we have it put in as cost of goods sold fulfillment fees. If you guys don't like it, you can, go to the drop-down, select a different chart of account. So you set this up once, and it's good to go. You can also actually save all these chart of accounts for your reference, and if you have, let's say, multiple clients, you can just like upload a CSV sheet each time, so you don't have to redo this whole setup. So the idea is, if you use a software like ConnectBooks, you completely automate this whole process, and this saves you a lot of time and a lot of headache. Then we had different options of how to bring in the data. As Hector showed, there's different ways of bringing the invoices. You can do like one big invoice for the day. You can do one big invoice for the month. You can also do like every single order. In ConnectBooks, we give you the option how to do it. We break down you can bring in every individual order to QuickBooks, although we don't recommend it. And then we have an option to make one big invoice for that day. We have an option to make one big invoice for the week. And then we also have an option to go by settlement, which is the most like summarized. And each disbursement will create, whatever journal entries and invoices needed. Although keep in mind that one of the things Hector mentioned a lot was having the proper cutoff time, right? So there's two ways how we can do the entry. We can either do the entry like by month, and that's how you have the proper sales and accrual and all the fees in that proper month. Or you could do like by deposit, which doesn't break it up by month. But ConnectBooks gives you the both of best worlds. We do it by month and we match the bank. So whatever method you choose, however you're going to try to set this up, we will always split the sales by month. So when you run a monthly P&L, it will match back to Amazon. It will match your Amazon 1099. And it will also, we will do a payment which will match exactly what got deposited in the bank.
And I want to add something. Go back to that screen.
Sure.
There are two areas here of big concern. One is the decision you make when it comes to sales and fee breakdown. So that would be the closest thing to that would be the journal entry I was discussing. And then the second one is the breakdown of the QuickBooks invoices by single orders, daily, weekly, or by settlement. So the breakdown invoices by is specific for you to decide how you want to do your reporting. So if you do daily reports, weekly reports, or biweekly reports, and then if you do monthly, then you definitely want to do daily. That would be the most accurate one because you'll get all 28, 29, 30, or 31 days. If you do weekly, the only challenge you're going to have is there will be months, like there's 2 months out of the year where there's 5 weeks instead of 4 weeks.
No, but even if we do weekly, if the month finishes, let's say on Wednesday, for that week we'll have to do 2 invoices.
Okay, so no matter what,
yeah.
So no matter what you're saying is ConnectBooks always respects the breaking of the months, regardless. Okay, that's good to know. And then the other side here, which is sales breakdown by item, category, or summary. Look, when you look at a P&L report, do you want to know all your Amazon expenses by, based on the sort of the channel itself, the entire Amazon channel? Or do you want to know what those expenses are based on specific items so you can know which items cost you more than others? I think I mentioned earlier in the webinar that you could have an item that you offer free shipping and some that you don't. And of course, the cost of shipping is going to be more for one item versus the other. So sometimes just having one lump sum expense for the entire channel is not as indicative as based on versus reality as having the breakdown by item could be. And then could you explain category, like what's sort of in between item and summary?
So yeah, that's a very, very good question. So category would be, let's say you're selling 2 different categories like home and kitchen and toys. So you want to see, you don't want to get so granular, but you want to see what am I making on the toy section? What am I making on the home section? And I actually had a very good idea for a customer who had a lot of different products, and it was very hard for him to grasp and understand which products were making money. So what we did is we did categories. So because he had like 1,000 items, so we couldn't, we didn't know where to start. So we set up categories, which like we made buckets of like 50. So that helped us, work through certain products. And then another thing we also did, which was very cool, we made the category be based on supplier. So what happened is we wanted to see, are we making money off this supplier? Yes or no? We don't care. Even if there's one product, if we're making money, but the rest of the products we get from the supplier is not really making too much money, then we're just going to tell the supplier we can't deal with you anymore. So we took every product, we categorized it based on the supplier, and then we ran the P&L that way where we're able to see how much money we make off each supplier.
And how do categories come into QuickBooks? Because QuickBooks has categories for items, but I have a feeling that you're using the word category, but not necessarily mean the product and service categories that are in QuickBooks Online, for example. So these are your own categories you create in ConnectBooks, and you're bringing into QuickBooks how? With classes?
So yeah, so we have 2 options on that. option one is that the categories could only stay, the categories could be just in ConnectBooks, so you don't have to bring the categories into QuickBooks. Option two is to bring it into QuickBooks, and that is the class tracking. So when you enable class tracking, there's two options. You can do a class tracking in every single transaction, and we will class every single transaction down the line with the proper class. If you use QuickBooks Online, you have to just make sure that you don't go above 40 classes, because otherwise you have to go for the advanced. So if they have the advanced, we automatically enable classes. If they don't have the advanced, then we disable it. And if they open up a support chat, we will override it and tell them, okay, we will create classes for you, but just keep in mind, don't go above 40.
Makes sense.
All right. So let's move on to the next slide. So we have something called, now, once the data is ready to go and you set up the chart of accounts, you configured how you want the invoice breakdown, you configure the sales and fee and all that, you will have a list of all your disbursements. Now, let's start with the bottom. The simple button is there's a green export button. Once it's ready, you hit export. Once it's in QuickBooks, it's going to show you exported. So that's how you don't have to keep track. Did I bring it to QuickBooks? Did I not bring it to QuickBooks? So you'll see the status changes once it goes into QuickBooks. Then we have the auto sync feature. The auto sync feature is if you say that you want to set this up to run in the background, you don't want to, you don't want to touch it at all. So in that case, what you do is you set the whole thing up and you enable the auto sync feature. Every time there's a new disbursement, it will automatically send everything over directly to QuickBooks. Now, this is an accounting. This feature is specifically a love feature for all the accountants. Whenever time you're doing bookkeeping, whatever you're doing, there's always sometimes you make a mistake and you want to reverse it. And reversing it can, be a lot of work and a lot of effort. So one of the things we built this actually out a while ago, but we made it available for all the users probably like a half a year ago, is deleting from QuickBooks and sending it again. So what happens? Let's say there's a chart of accounts you didn't configure properly, or you didn't realize that this fee meant this chart of account, and you don't like the way it is. You can come over here and just do delete from QuickBooks, and we will pull back the whole disbursement. And you can delete a half a year of settlements in under 10 minutes. Like you can delete a ton. And then you reconfigure it. And once you reconfigure, you do send again to QuickBooks. So it regenerates the data with a new chart of accounts the way you want it to set up. And then it completely goes back into QuickBooks. This is very seamless. This will work. And this can also work even in a case, let's say, where there is an issue sometimes deleting data from QuickBooks. You can do manual adjustments, or let's say you manually deleted it from QuickBooks. You can go and then just send it again to QuickBooks. So the status is exported. That's once it's in QuickBooks. But if you want to send it again, do send it again. Ideally, what you'll do is first delete, and then you do send again. Now, you can go even a step further. Let's say you go through your chart of accounts. You can go right away, just switch all the chart of accounts. You can hit delete, and a second later, you can hit send again. You don't have to wait, till everything goes through. You can right away just delete, send again, and everything will just come back to QuickBooks properly.
That's huge, because I remember earlier when I started dealing with e-commerce, I took in a client that didn't have their items set up correctly. Their items were all posting to the wrong accounts, and they had in their to-do list to go back into the item list, the products and services list, and match the right items to the right sales category, cost of goods sold category, etc. I didn't know that issue was there at that moment in time. I didn't think to sort of slow things down and go back and make sure the items were configured correctly. So we added a third-party app, not ConnectBooks, a different one, and we brought in, I think, a year's worth of transactions. They came in beautifully. All the sales receipts came in, the invoices came in, they were all hitting the right items. But guess what? When we ran a P&L report, the revenue report didn't look right because the items were not set up correctly. So I tried to change the one by one, change the item categories, and this is like thousands of items. And because of how quirky QuickBooks is, sometimes they let me go backtrack, and sometimes it didn't. And in some cases, when it did let me go backtrack, I couldn't put a backstop on it, and it would backtrack from years in the past and restate all my financial statements. It was just potentially a humongous mess. So the only solution that we had is we had to get another app to go in and delete first of all, identify the transactions that this third-party app created, delete every single transaction. So then we can slow it down, go back into the item list, fix the account mapping to every product, and then resync again. And that third-party app didn't have a button that said send it again to QuickBooks. The way they did it is once it's synced, that's it. You didn't have another button to sort of sync it again. We had to call in tech support, explain what happened, and then they had to sort of like manually enable the resyncing. So like it seems like something small, but when you actually think about it, especially the people that are just getting started with adding third-party apps into QuickBooks, and they can't think of every possible thing that can go wrong, this stuff is going to happen. And it usually only takes like sort of one negative experience or two for accountants like me to just throw the towel and go, you know what? I'm never going to connect a third-party app ever again because it's going to screw me up and it's going to take me hours and hours to try to fix and recover. So something as small as a delete button to delete everything you entered and send it again, I think is huge. And like it would have saved me days of work if I would have had something like this in that particular case.
Yeah, I could just imagine. I mean, I've had that many, many times. And one of the things I always do is when we set up new accounts, and especially if somebody's coming like from a different app or they've done it a different way in the past, we tell them the way we bring in the data is by customer. So we tell them create a new customer called, let's say, CB-Amazon. And let ConnectBooks bring in the data under that customer. And that's how you can see exactly if you like it or not. Because you run a P&L, you filter down to that customer, you see exactly what happens. And what I also do is you can compare it. Let's say, for example, you're using a different software. You want to, let's say, compare, we're using a different customer, using one customer. You can always run side-by-side comparisons to see how things look and, how you get it in. And then if they don't like it, I tell them just hit the delete button and it's gone. If you do like it, stick with mine and go the other and delete the other data.
And this whole by customer ordeal is that you will never recommend someone to sync Amazon or any sort of e-commerce into QuickBooks where every single individual customer name, John Doe, is a separate invoice or a sales receipt. I think what you're saying is there's one generic customer in which all the transactions come into that customer. That way you could always run, let's say, a report, a P&L, sales by customer or something like that. And you would even essentially know your sales per channel. That way you can still use classes, based on our previous conversation, you use classes to really identify sales by category, because you could essentially have a product that is the same product across multiple channels, and you want to see the overall performance of all the products across all the channels. But then if you're doing that, how would you know your sales by channel if you're using classes for something else? And this is actually a brilliant, good idea that you guys came up with is, hey, let's do it by customer. That way we can always have the dimension customer and classes. We could always run matrix summary reports with that, with those two dimensions. So like I love that tip. And I want to make sure that people, this wasn't just a passing thing, by customer. No, this is actually an important thing because you want to run those reports by channel in the future.
Correct. All right. So now let's go back. And as you see over here, actually, you see I have a few different customers created. And the reason why we create different customers is because just bringing data from different channels. And also I was testing stuff as we were preparing our sample file. But you see, like, we have a customer called Sample Amazon. And under there, you see all the deposits. So all the deposits will come in nice and neatly. They will all match the bank account. And then once you open up each deposit, you will see every invoice attached to it. So over here, you see, let's go back a second. So you see there's a deposit here of $8,000. And this $8,000 deposit over here, if you open it up, you'll see all the journal entries associated with it. Now, this goes back to what I was saying earlier about splitting it by month. So as you see on the top, we got 531, and then we got another journal entry 531, and then we got one for 6/1. And the payment date was actually 6/2. So what ConnectBooks is doing, it's creating these journal entries for the proper month. And this doesn't matter which setting you choose. It doesn't matter whether you're choosing, whether you're going daily, weekly, monthly, summary, whatever setting you choose in ConnectBooks, we always split the data by month. So as you see here, the data, the sales for May come in under May, and the sales for June come in under June. And then you have one payment which that was the amount that came into your bank. So that's when you reconcile, it will be very easy to match the bank and everything gets applied accordingly.
And to be clear, Nahum, what you're showing on the screen, all these journal entries that are matched to the payment, these things are coming automatically from ConnectBooks. Like in no instant or circumstance, I'm actually creating a journal entry or an invoice or a payment. Like all this stuff comes from ConnectBooks, correct?
Yeah, it's 100% automated, but to point out, it's not just the journal entries are automated, the payment is automated as well, and ConnectBooks takes the payment and applies it to the journals, meaning nothing here was done manually. Everything gets done through the software, the journal entries, putting in the payment and taking that payment and applying it to the journal entry. So you shouldn't have any open receivables, anything like that. Everything should be booked properly.
The only thing you manually do at the end, if you can call it manually, is to reconcile the bank at the end, which is obviously post downloading any detailed transactions. So everything else in your accounting is still status quo. You still have to download transactions in the bank. You still have to categorize your expenses, operating expenses not related to Amazon. But essentially, everything that has to do with income and the direct costs associated with income, that's the part that you guys automate. Now, what about the cost of goods sold? Like how does that get automated?
Yeah, let's jump into that. So we have a slide. Let's just go through this and we'll get to that in a minute. So, and then this is the QuickBooks entry. So what you see the journal entry looks like, you have the sales minus the fees, referrals, you credit sales, debit the fees, and then you have the shipping credits, you got the shipping discount and gift wraps. You get everything nicely broken out, and then it ties into AR. And then once all the journal entries in, the payment will tie out of AR, and it will apply everything automatically. So this goes to Hector's question: what happens with cost of goods sold? So first, these three big benefits in tracking cost of goods sold with ConnectBooks. First thing is you don't need to track inventory in an item level QBO, which could be a pain, especially if you're like an outsourced bookkeeper or an accountant doing the bookkeeping. You don't want to be busy creating huge bills in QuickBooks and recording every single item and putting in the quantities. You can just dump everything directly into inventory asset. Next thing is ConnectBooks also keeps a log when the cost item changes. So this is a huge feature. And what happens is a lot of times, and this is what I've had personally, stories where clients come to me from other, like they use other accounting firms or they're using other apps. And they say like at the end of the year, they're showing, let's say on their P&L, $900,000 cost of goods sold. They're telling the accountant, no, it's really 800. Now, why would somebody say the cost of goods sold is less, right? I mean, sometimes, and it could go the opposite. The accountant could say 900, the customer could say, well, it's $1 million because they want to pay less in taxes. But then there's some people who want to show more profit. And the reason why they want to show more profit is they're trying to sell their Amazon business. So it became like a recent trend in the last few years of selling an Amazon business. It's although down a little bit on today's economy, but people are actually still selling. And when you sell an Amazon business, the way it works, it's usually a multiple of EBITDA. And when it's a multiple of EBITDA, it will have a direct effect on what your cost of goods sold is. So in my case, it was the accountant was saying cost of goods sold was 900. The customer was saying it was 800. So the customer is saying I have additional $100,000 in profit. And if they're looking at a 4x multiple, that's $400,000 on the table. So what happens is the accountant really didn't know how to go about it. They were like, well, this is what we were doing throughout the year. We have like 35 different spreadsheets because every disbursement, they had like another spreadsheet where they save the cost. And they would need to take every disbursement, find that spreadsheet, find what the cost is put in, recalculate it, reevaluate it, and then come up with a proper number and reinsert it into QuickBooks to do like an adjustment entry. So that was very frustrating for them. And that's why it's very important that you log. It's not just having a price list of what every product costs, especially in a market today where everything is so volatile and it goes up and down. You want to log when the prices go up and when the prices go down. And then the other thing is you get also run on ConnectBooks very detailed reports on your cost of goods sold to verify accuracy. So besides keeping the log and telling you, okay, this product, let's say, changed throughout the time, let's say throughout the time, we also want to run detailed reports to verify accuracy. So let's go into this. So these are single journal entry you would put into QuickBooks, which this ConnectBooks would create. You would have a journal entry. It would debit cost of goods sold and would credit inventory asset. So every time you do a purchase, all you got to do, take all those purchase orders and just dump them into one account, inventory asset. And then you can even set like a rule in QBO that every time you purchase from a certain supplier, it should right away put into inventory asset. And then ConnectBooks will take it out of inventory asset and put into cost of goods sold every time it brings in the disbursement.
And is that also split by month? Like, so if you have
sure.
Yeah, perfect.
Okay, now this is going back to the log. So over here, you see this product up till 2/28, it cost us $6. Then from 3/1 to 3/2 went to $5. And then from 3/3, we actually did two things. Number one, the price went back up to $6. And then we also added a prep cost. So sometimes people know that a certain product costs them to prep, let's say $1 or $2, and they want to include that as cost of goods sold. So they have better visibility to understanding what their true profit is in a month versus without like expensing it throughout the month. And then we have something called old stock and new stock. So what happens is this runs on the average cost system. So we had 500 units from the old stock that we bought at $5 a piece. And now the new stock is really $6 plus a prep of $2, which is $8. And our new stock is 1,500 units. So ConnectBooks is giving you an average that as of 3/3, the average is $7.25 a unit. So in this case, where you have like a conflict with a client or something, you're trying to find out what the cost was throughout the year, you can see over here, every time the cost changes, ConnectBooks will log it automatically.
Now, you mind if I ask for some clarification here? So this is not reading the costs from QuickBooks Online. You don't even have to have inventory items in QuickBooks Online. Correct. This is not reading your inventory levels. It's not reading your inventory levels from QuickBooks Online, although I assume it could.
Okay. Yeah, that's a separate feature. That's meaning we have two types of ways of like mainly integrating. Meaning one is that people say we don't want any items in QuickBooks. In that case, they wouldn't even be creating inventory or non-inventory. Although you could create non-inventory items, but if you want to be efficient, you would just make a rule that every time you have a purchase from a certain supplier, just dump it into inventory asset and just let it go from there. And then as long as you give ConnectBooks the proper cost, then we do the calculation. And every time there's a disbursement, we just say, okay, this is what cost of goods sold is. We'll do that journal entry for you where we take it out of inventory asset and put it into cost of goods sold.
So let's assume the best case scenario where I don't use items in QuickBooks. And if I use items in non-inventory, not a big deal. Every time the item is purchased or there's what you're calling here prep costs, which in some worlds we call a landed cost, is pretty much similar concepts. We take all of our prep costs and all of our landed costs and we dump them into inventory asset. We take all of our purchases, including our shipping, and put that into inventory asset. And that the entire purchases in the accounting in QuickBooks goes to inventory asset. Then separately inside ConnectBooks, you're going to have either a single sort of average cost, item cost with prep costs and shipping, incoming shipping, all that stuff. You will have that loaded in there. And that could just be one with one date, no layer dating like the one you have here. Or you have the option to create multiple periods inside the item with multiple changing costs. And ConnectBooks will keep an average cost of each FIFO layer, it looks like, based on the date that it was purchased. So the date itself, it becomes sort of a FIFO layer. But in all the sales inside that grouping, inside that period, this is what you're calling a period, are average costs. So then when ConnectBooks sends the sales to QuickBooks for that month or that period, it's going to also send a journal entry for that period based on those sales. And then the way it calculates cost of goods sold and the inventory asset adjustment for that particular journal for that period, it's based on the date of the sales and the average cost on each of the dating periods. So am I understanding that correctly?
Yeah, that's exactly how we do it.
Awesome.
Now, we did have one thing before that we mentioned, run detailed reports on cost of goods sold. We have a separate slide a little later. We'll jump back to that in 2 minutes. So over here, we also have an option where you can track inventory on an item level in ConnectBooks. So now we're discussing before, what if you don't want to track inventory on an item level? Now, what if you want to track inventory on an item level in QuickBooks? So then you have three different options. You have the standard item, you have kit items, and you have multi-pack, and then you can also have multiple Amazon listings point to one item. So if you do want to track inventory in QuickBooks in ConnectBooks, if it's, let's say, for example, you're selling, let's say you buy a can of Coke. So it's a standard item, right? It's you buy a can of Coke, you sell a can of Coke, comes in and out the same way. Then you could do, let's say, for example, I buy a trailer load of cans of Coke. Okay, I get a trailer load, let's say 100,000 cans. Now I'm trying to start to get rid of it. It's not working as well as I thought. So I have to start being a bit creative. What I'm doing is I will create 2 packs, 4 packs, 6 packs, 8 packs. So I'm creating, you'll have multiple different listings in Amazon, but they're always going to be a combination of different items, meaning a different, that will be a multi-pack, meaning it's multiple of the same units. So what happens is every time this SKU sells, Amazon just tells us, okay, product SKU 1, 2 sold. Now in ConnectBooks, what you do is you would take that SKU and you would say, okay, every time this SKU sells, take a can of Coke, but don't take 1 out of inventory, take 2 or take 4 or take 6. And then a kit item would be where you would, let's say, let's sell online a can of Coke along with a can of Sprite. So then you have to deduct from inventory 2 separate products. Now, these stuff can all be set up in ConnectBooks. And that's how, whatever way you're selling your products on Amazon and you want to track inventory on an item level in QBO, it's not a problem as long as you set it up properly with any of the different types. Now, and then you can also have multiple listings. A lot of times people have like 6 or 8 different listings, 6 to 8 different SKUs on Amazon. That's because they have different shipments or different stuff. And really in QuickBooks, it's all one item. You can point it all to one item in there.
Let me tell you what my experience with this is, and then maybe you'll tell me if I'm on the right track, if I'm understanding. I'm trying to put myself as a consumer of Amazon products, try to understand what it looks like on the other side. So, for example, sometimes when you buy like a case for your phone, you get into a listing and you're looking for just a case. And then when you get the box, there's a case, there's a cleaning cloth, and then there's maybe the screen, okay, the transparent
screen protector.
The screen protector. It all came in one box. Like it was one item in Amazon. Then when you go back and you start looking at that particular merchant, that seller also sells the screen separately, like as a separate item. And maybe they don't even sell the cleaning cloth. So for inventory purposes, the seller is keeping track of the cases, the screens, and the cloth. 2 of them get sold, 1 doesn't get sold, and sometimes 2 of them get sold as a single item. So all these levels of complexity, like it looks like you guys have encountered that already. And inside ConnectBooks, I assume there's sort of like a mapping where you say, okay, this particular item in Amazon, it's 2 of these, 3 of these, 1 of these. So at least it can do the cost of goods sold adjustment, correct?
Correct. So what happens is in ConnectBooks, you'll have a mapping page, which will show you, the different type of items. And, we can just I can just show you quickly right over here. So we're going to log in over here to ConnectBooks, and you see we're under the products tab. You select the proper store, and then you have QuickBooks inventory configuration. And here you see, if it's a standard product, you have an option, you select QuickBooks, and then it will pop up all your different QuickBooks items. And as long as you search, if I like typing product 1, 2, you see all my products pop up there. Now, if you want to do a multi-pack, which you would have over here, you would choose. So if it's a multi-pack, it means it's multiple units of the same item. Then what happens is over here, it would still stay QuickBooks, and you would have the same item called test item 2. And then you would put it over here to quantity. So every time this product sells, we take this item out of inventory, but we won't take 1 unit, we take 2 units. And you can put in here whatever number you want. And then you have the group items, which over here, you would have this item, product 3, linked to 2 separate items in QuickBooks. So for example, if you have the phone, a phone case and a screen protector, you would put in over here one item called phone case, second item will be screen protector, and then every time this product sells, it will take one out of these separately. And let's say the phone case sells separately. Now, one thing I just want to clarify, on Amazon, every time you list a product, it will get like a different SKU. So for example, if you list the phone case individually, it will have its own SKU. And then when you list the phone case with the screen protector, together they will have its own SKU. And then if you list the screen protector on its own, it will have its own SKU again. So they will come in multiple times here, and that's the beauty of it, where it comes in multiple times, and based on each time how it sells, you configure that to the items in QuickBooks, and that's how ConnectBooks will pull that out. And I just want to mention one side thing. I know that there's bundle items in QBO. We don't use bundle items, and it will be very hard for you to use bundle items, because bundle items in QBO, you need to assign the products every time you enter a sale. So you can't use like an import, because when you use an import, there's too much information that has to be passed through in order to do bundles. So bundles is going to be very hard for you to use. And that's why ConnectBooks has its own group items, where we basically attach to individual inventory parts in QuickBooks, and we go from there.
And you don't really lose anything by not using QuickBooks Online bundles, because QuickBooks Online bundles don't show up in reports anyway. So like you can't run a report by a bundle. So like a bundle really is sort of a shortcut for data entry. So it would be you literally lose nothing by not being able to use bundles. And I do have a question. One thing I noticed that in every one of your drop downs, there's a thing that says QuickBooks item, and you have to select QuickBooks first. What is why is there a drop down item? Like, what would be the alternative, and why would we have that?
Yeah, that's very good. So we got 4 different options of your product. So on Amazon, there's something called an ASIN and a SKU. So an ASIN would be like unique to the product itself. A SKU would be unique to the seller. And then, so if let's say your products are set up you're very organized, and every SKU in Amazon corresponds to a different product in QuickBooks, and you don't want to be busy doing all these mappings, then what we can set some rules in the back end that every time you choose, we can take all these products and assign it to the SKU or the ASIN. So then you don't have to do any configuration. Now, then we have 2 options. There's something called QuickBooks and something called new. So new means if you want us to create a new item in QuickBooks. So let's say the product does not exist, and I can just type in over here phone case, and we will create a new item called phone case, and this will be an inventory part, and there is settings which chart of accounts we should use. Now, the other thing is, a lot of times we get clients that say, hey, do not make any new products for us. So in that case, we do it by QuickBooks, and we say, look, if it's not in QuickBooks, it's not going to come up here. And we also have an Excel sheet upload where you can map stuff via CSV. And in that case, where the QuickBooks gets very useful is what I do a lot of times when I set up new accounts, I do like a lot of I tell them if they're coming from a different platform, I say, give me the item list you have from the other platform, and let me try to configure it. Now, what I do is I always set it to QuickBooks. So let's say I'm configuring 1,000 items, but only, let's say 700 are in QuickBooks. The other 300, we're not sure. So if I set the setting in ConnectBooks that it should only pull the product if it exists in QuickBooks, that I'm confident that if my formula works, it will pick it up. And if not, ConnectBooks will just shoot an error. I'll ignore it and just move on, and finish up the rest of the products.
Look, I've used many apps that connect sort of sales transactions into QuickBooks, whether it's a sort of retail point of sale system, whether it's e-commerce, whether it's some sort of wholesale channel that loads into QuickBooks. And I can tell you, without a shadow of a doubt, the hardest, most complex piece of getting this to work is to map the items with QuickBooks. Where the items are not mapped, that's when all hell breaks loose. Either new items get created roguely, right, with the wrong account and the wrong mapping, or the sync doesn't sync because the item doesn't exist, okay, or it tries to create a new item that already has an existing name. That whole thing is always a huge ordeal. So it takes extra amount of time, yes, to go back into the drawing board and only sync things once everything is mapped into QuickBooks. But the couple of things that I've noticed with ConnectBooks that makes it very different than others is, one is if you make it a habit to put the SKU numbers and the ASN product numbers inside QuickBooks. Let's say QuickBooks is your source of truth when it comes to accounting items, Then you can, with the rules that you guys have, you can have these things automatically be assigned to the right item because it's matched to the SKU and the description or whatever rules that you create for it to automatically attach it to the best possible item. And it won't always get it right. But there's also this other concept of unmapped, which I think you can explain better than I. That's an interesting one too, which is, hey, like don't create an item, don't map it to anything, but still allow me to sync. Like how do you come up with this unmapped concept, and maybe give us some use cases in which this is actually putting unmapped is the right thing to do?
Sure. So what we do is we have like those rules that we can assign like to the ASIN or the SKU. And then we have something called like, don't do any rules. Don't create anything for us. And when you don't create any rules, you would need to manually go through each product. Now, just keep in mind, most sellers who track inventory in QuickBooks will constantly use the same SKU in Amazon, meaning whenever they replenish their inventory in Amazon, they won't be making new SKUs. So in that case, they won't have to reconfigure it. Now, by default, when you turn off the rules, well, what happened is all the products would be unmapped. Unmapped means it says we don't know what it is, and we're waiting for you to go through and configure it. And sometimes it could be certain scenarios where like somebody says, okay, in this case, I don't want to record this as an inventory sale. So what they can do is they can configure it to like a non-inventory item. And then when they finish exporting, they can come back and take off the configuration and just leave it unmapped. So unmapped basically means that we don't know what it is. And what happens is now, what's going to happen if a product is unmapped? When you're going to try to send a disbursement to QuickBooks, we won't let you send it because we're going to tell you there's certain products in there that is not mapped. And what I'll show you over here is if we go to our disbursement page, what does unmapped products mean? So we have a disbursement of $137,000. And what we do is we go through every single sale in this disbursement and make sure that every Amazon SKU is assigned to a QuickBooks item. And if it's assigned, then you get the export button. If not, it gives you, it shows you this button. And when you hit resolve, it brings you back to that page. But the cool thing is, we're not going to load all the products. You see, before we started for product 1, now we're product 82. So what it's doing is it's showing you that all these products need to be configured. And once you configure all these products, at that point, it's going to let you export.
I love that. So it guides you through the proper setup instead of just attempting to sync, giving you a sync error, and you having to go through the sync error log to figure out what happened. Like that's the stuff that drives me freaking bonkers about third-party app developers, that they think like engineers. They're like, okay, yeah, we'll just give you the error log and you can figure it out from the error log. It's like, dude, we don't have time for this. So I love the fact that you sort of pre-vet the transaction and go, hey, I'm not gonna like send a partial, because I could also some apps do this where they only send the ones that are mapped.
That makes such a mess if you do
it's such a mess.
data.
Yeah, absolutely. So I love this, like how you thought about this particular step, because this one right here is crucial. And I gotta tell you, with any third-party app connecting sales to any accounting software, if you don't get the mapping right, or you don't have a good workflow to understanding how to go about getting the mapping right, everything breaks from there.
Yep. No, it's the mapping is a little bit, I would say, more to the pain, but it's the good thing is that once you set this up, you don't add on new products every single day. Most sellers, like, once a month, they'll add on most 5 to 10 products. So in that case, ConnectBooks will show you that unmapped, and you would go back and just map those few products and just go from there. All right. So as we showed you in the ConnectBooks, you were able to see in the ConnectBooks app how, the kit items, multi-packs, and the multiple listing, all of these work together. So then we have a detailed profit and loss per item. So I'm going to actually jump back to the app instead of showing this on a slide and just show you live what this looks like and how useful this is for sellers. So we're going to go into ConnectBooks. We have a profit and loss. We're on the standard report. And we're going to go over here, select the channel, and we're just going to do run report.
And to be clear, you're not running the entire profit and loss for the company in ConnectBooks. This is just sales and direct costs associated with the sales. Only what's managed within the worldview of ConnectBooks, like your rent and your payroll expenses, are not going to be here. So it's a profit and loss off the e-commerce channel, correct?
Correct. Now, there is two very important parts about this. And this goes back to, I mentioned in the earlier slide about verifying cost of goods sold. So going back to the earlier slide, and what I love about this report, and, my background is accounting, and, I'm doing already accounting for 12 years. And every time I have to do a report for a customer, a P&L in QuickBooks, in QuickBooks, I always do a P&L, but I do a general P&L. When I want to start getting granular and getting more into detail, I always come back to ConnectBooks. Now, why do I love, one of the reasons why this report is different than any other reporting tool you'll find for e-commerce is these numbers in the bottom, what you see here, will match back to QBO. So if ConnectBooks brings in the sales to QuickBooks Online, we will, and let's say you see in QuickBooks Online, you did 400,000 sales, you will see the same number over here. Now, let's say so let's go back to the cost of goods sold. So you see in QuickBooks Online, ConnectBooks had booked journal entries throughout the year, let's say total of $1 million cost of goods sold. And you are like, is this data accurate? And your client is telling you, I'm not so sure you have the right number. And in that case, what I do is I say, come, let's go into ConnectBooks. Let's select the date range. You can run it for a full year. You can even run it based on the disbursement on its own. You select the settlement tab, and here will pop up all your disbursements. So I always run it based on the date range. And I tell them, okay, you have over here the cost per item. You have the total cost. So your total cost is 156. And if you, let's say, pick up a certain product that you don't like the cost, you can edit it right over here. I showed you before, there's a different tab where you can edit it, but you can do it right from right over here. You can edit the items, and you can just like tell them, okay, maybe we'll fix a few costs, or maybe we need to add like a cost period, like, like a log, or maybe you can do, let's say, for the first half of the year, you can do like add a new period over here. You can say that, as of August, the price went up or the price went down. And that's how you can log different costs right over here within the report, and it will update accordingly. And then you have your bottom number to verify accuracy. So besides doing all the steps throughout the year, at the end of the year, you also want to have that report, which will give you the cost, which will match back to your QuickBooks numbers. So if you see in QuickBooks Online $1 million cost of goods sold, or whatever, let's say 156,000, you will see the same number over here. And that's how you can verify that everything is accurate and the numbers are making sense perfectly.
And I could tell you right away that if so, two things. So first of all, thank you for giving me a spreadsheet and not a stupid little graphic about profitability. Because one of the things that drives me crazy about a lot of these apps is that when you go into like profitability or profit reports, you get the pretty graph that contains, for lack of a better term, a pretty graph, but doesn't contain the data that I need. Like when I'm doing these things, I'm data hungry. I want to see numbers, percentages. I want to be able to export this to Excel, which doesn't show it on this screen.
Yeah, I do. You'll have a button download right over here.
So what's brilliant is like I can look at, because I know people are cringing when they look at the edit button on every single item to change the cost of an item. And again, this does not modify the cost in QuickBooks if you're syncing with QuickBooks and you have QuickBooks inventory. This is the cost information that ConnectBooks keeps in its own internal database, so it can figure out what cost of goods sold might be for you. But what's brilliant about this screen is you can export this thing, and then you can edit the cost in Excel, and then you can use the bulk importer in the item list and import the cost in there, and you can import this cost only for the specific period. So you only modify the cost of goods sold for this reporting period. It's like this like no other app that I've seen has thought of this in this level, which is like why I think you guys are sort of one step ahead of everybody else, because you give accountants, the nerdy, the engineer type of accountants, you give us all the tools that we need to really like sort of modify and calculate these things in the specific way that we want. So I really appreciate that.
Yep. So now one thing I want to just clarify a little bit. So you'll also get a breakdown of the sales. And this happens a lot of times, especially when Amazon takes up so many fees. Like when you run a P&L with your customer and they're like, I did last month $1 million in sales, it doesn't make sense. So over here, this will give you the breakdown on the sales as well. So you can show the customer, well, if you want to break down by item, here's the total sales, and then you have the cost, and then you have the profit, which will match up exactly to what you have in QuickBooks Online. Now, I do want to clarify one thing. The cost changes, that's if you don't track inventory in QuickBooks Online, meaning you're doing just journal entries, a summary, and you're logging your cost in ConnectBooks, that's where you'll have the option over here to edit the cost. But if you're tracking inventory in QBO on an item level, then you will see a cost over here, but that will be what we retrieve from QuickBooks. So we got two different ways to go about it. One way is that you put the cost in ConnectBooks, and then you come here to change it. And then in QuickBooks, you don't have any items set up. The other option we give you is if you set up your items in QuickBooks, if you want to do inventory tracking in QuickBooks, ConnectBooks will fetch the cost per item from QBO, bring it into our database, and then when we do the reporting, we'll show it to you over here. And where that is crucial is, and I've seen this many times, sometimes like you create a bill in QuickBooks and by mistake, you forget to put in the quantity. You buy, let's say, and I had this yesterday with a customer. She called me up, something doesn't make sense with the inventory. After like a 2-second glance, I showed her, oh, this bill, you bought 10,000 units and you by mistake put in one and the dollar amount. So of course you're messing up your average cost. Of course your average cost is showing that each product costs you $15,000. So in that case, the problem is that, and this also gets very tricky, which, Hector can definitely attain to this. It's very tricky a lot of times in QuickBooks Online to verify when you look at a P&L and you look at cost of goods sold. If I see $1 million cost of goods sold in QuickBooks, is it accurate or not? How do I know if it's accurate? So, one way is within QuickBooks to run like a sales by item summary to verify the details. But if you're using ConnectBooks, we pull the cost back in and you will see what the cost is. So if your cost got messed up and you didn't enter the proper cost, you'll see it right away in 1 second in ConnectBooks. And you can also sort the sheet. You can do, let's say, profit. You can make anything, let's say, less than zero. And this will show you clearly, any products that's losing money on. Now, sometimes they could be losing money, or sometimes they just didn't set up the cost properly. And that's why it's not showing the right numbers.
Or sometimes you could be losing money. Exactly. It happens so often.
No, but I mean, you're not selling a product online for $100 when it costs you $10,000. That not. And I've seen those mistakes. It just was like a typo, and it's very hard to verify all those different results. All right. So back to our slides over here. So as we showed you, more in detail how this profit and loss works in ConnectBooks. So let's jump in a little bit to inventory. So if you want to track inventory at an item level, so we have the details where you'll see the product you sold, and then you would see the referral fees, fulfillment fees, shipping credits, and Amazon order fees. Because at some point, you would have different fees broken out, and then here we made a summary. We can actually break this out even more if you want to create like 8 lines for every product that's sold. Now, the way this works is, and this is how we recommend it, meaning we do have the option to bring in every individual order. We do have the option to do every single day, but we recommend to go more condensed so you don't load up QuickBooks with too much data. And what you do over here is this 662 means you sold 662 units from product 2, and the total amount you got from it was 15,000. So we will summarize it per SKU, and always keep in mind that whatever summary we do, we always break the data by month. Now, if you want to get more detailed, meaning where you want to have every sale individually, or you don't want to condense it that much, you can just set up the settings differently. And then from there, you can have QuickBooks go that route.
And one of your settings was item. The other was it item, summary, and category. Those were the 3 settings in terms of how they come in. So this is an example of the item because it's all broken down by item.
Right, but the category is not enabled, meaning I didn't enable class tracking. You would need another column here for the class tracking, and then you would take each product and associate it to a class.
So if category was on, then you would see a class there, because right now only challenge I see here is that, yes, in the invoice, you are summarizing or grouping the expenses by product. But if you run expenses by an income or profitability by product report in QuickBooks, you're not going to get any of those Amazon referral fees, fulfillment fees attached to the item itself. There'll still be separate items.
I mean, right. Is there a way to attach it to the item?
Yeah, well, but that one question is, if I wanted to attach it to the item, how would I go about that? Or, you feel that maybe I'm asking for way too much and we should probably think about category instead.
Well, I mean, the only way I was able to think of attaching it to an item is doing class tracking and then assigning a class to all those transactions.
Right. Well, so if you have QuickBooks Online Advanced that has more than 40 classes, unlimited classes, every item itself would be a category, right? So every item would be a category, and then you could do it. So it is possible. It's just it requires a lot more in-depth setup.
Yeah. And you don't have to have every item a class. I mean, that if you want to have every single item, or if you don't want to have every single item, you can take like 100 products and assign it just to one class, and we'll go from that way.
Right. So there's some planning, like prior to you connecting a third-party app via ConnectBooks or anything else, you got to do some planning in terms of how you want to see these reports in QuickBooks. Like, I mean, you might not even care about this level of detail in QuickBooks. You might just want to get a P&L and a balance sheet and automate the entries. Like you don't have to go this way where you know how many you sold for each item. You could just go with summary, go with automating the journal entry. This is if you want to also run reports in QuickBooks, because you can run reports in ConnectBooks at much better detail level that you even can with this. So like the point is that if you want to run detailed reports in ConnectBooks for knowing your profitability per item, you can. And if you want to go all the way to also doing this in QuickBooks, it's going to require your sort of more granular setup.
Yep. And this is what the sales by product summary would look like if you have all the products in here. You would have the quantity
as inventory items.
As inventory, correct. I mean, yeah, if you want to have it as inventory, I mean, you can have non-inventory, but then you won't have cost of goods sold. That's that part. But if you run it as inventory, you get the sales, you get the cost of goods sold, the gross margin. I would say the only thing I don't like about this report is it's going to be very misleading, because the gross sale on Amazon, like if you sell a product on Amazon for $20 and it costs you, let's say $5, your gross profit is $15. But there's so many fees on Amazon, it's not $15, it's maybe $2. So that's why we have the ConnectBooks report, where there we have all the other columns to bring in all the additional fees on a product level, and you see exactly more the profitability on there.
Which is why, we talked about this prior to preparing this webinar. You told me, Hector, my recommendation is never track inventory in QuickBooks. Because even if you did, and even if it was accurate, and even if like all the moving parts having to do with following an inventory workflow and respecting it and making adjustments, even if you were to do all that, the most valuable piece of doing all that, which is this report, is inaccurate because you don't get the Amazon fees. And this might be different for Shopify folks. I mean, like, so this is an interesting sort of divergence of the conversation, which is, if you're doing Shopify, where your transaction fee is the 2 to 3% credit card fee, and that's it, then your profitability in QuickBooks is a lot more meaningful. But in Amazon is a whole nother level. And I think we were talking about the percentages earlier. It seems like close to 40% of the revenue you bring in goes to some sort of Amazon fee, a transaction fee, shipping costs, or whatever. And 40% is a significant amount. Even if it was just 10%, it would be significant enough for you to no longer trust this report. So yeah, if you're dealing with Amazon, this report is probably useless anyway. Shopify, different story. So I think it could even get more complex if you have a merchant that does both Amazon and Shopify, and you also have the same product across both areas, because you really will never be able to tell what the true profitability is in QuickBooks. It's just not physically possible. So the only possible way is to get a consolidated profitability report that can look across all the channels into a single report. And QuickBooks won't do that, but ConnectBooks can, correct?
Correct. So yeah, that's it. That's our recommended method is profit or loss. You look in ConnectBooks and then you get a total summarized data in QuickBooks. So you know exactly in QuickBooks, you run a regular P&L, regular balance sheet, you see exactly what's happening. And then in ConnectBooks, you just go into the detail. You have all the details built out. And I just add on that we have added on a lot of features to our reporting. I didn't even get to any of those features. I mean, we have templates, we have column choosers, we have comparison reporting available. We have a ton of different features available in the ConnectBooks reports, and we are every single month adding in like new stuff, which in QuickBooks would be almost impossible. Like I can just give you one little example. It's something called like a peer and ASIN. So for example, let's say you're selling a type of shirt. So you can have multiple variations. You'll have small, medium, large. You can have blue, white, green, black. So when you're selling a shirt, you can have, I would say, like 100 different variations for each shirt you want to sell, all the different sizes and all the different colors. And in ConnectBooks, what you would want to do is you'd want to see, okay, what am I making in every size? But in reality, you have to carry all the sizes. So you want to look, how much am I making on a whole off this shirt? So in Amazon, there's something called a peer and ASIN. So we showed you the ASIN, there's something called a peer and ASIN, which would have all different variations from the shirt. ConnectBooks has the ability to run the report by peer and ASIN. So we can tell you off the peer and total sales, total fees, total ad spend, everything, total cost of goods sold, this is your net profit. For us to build that out in QuickBooks, it's literally almost impossible. So that's where, that kicks in.
Yeah, I could totally picture it like with an example of the phone case. Sometimes I go buy a phone case for one of my kids or whatever, and you see one SKU, one ASIN that has like 37 different colors. Like,
Yeah.
like imagine having an e-commerce store where you have 7 or 8 of these things that inside of it there's 37 or 40 different categories. Like your item list is going to blow up so quick. And at the end of the day, does it really matter that you made more money on the blue one versus the green one? No, nobody cares about that. I mean, we might care about overstocking one particular color that's not very popular. We care about that, but that's a different thing. That's a sort of inventory management. But when it comes to profitability reports, we care about that. What do you call that? Pure and ASIN? What is
Pure
it?
and ASIN, yeah. You want to make sure the whole ASIN as a whole is making money.
Got it. Okay.
Yeah. Alrighty. So it's been amazing over here with Hector. Really enjoyed the time with you, and your input is always valuable, and the insights you always bring into every webinar is just amazing, and how you just light everything up. I'm really thankful for doing this with you, and for any e-commerce accounting questions, I'm here to help you. You can email me directly at nleaser@connectbooks.com. This is my email, and we also have a LinkedIn community that we just created. So we have a LinkedIn group. This is the link to the group where we will be posting content about e-commerce accounting. And any questions you have, you can always post in the group, whether it's me or other people in the group. They'll always be there to answer. And then you can follow us on YouTube as well. This is our YouTube channel. We're going to be uploading a lot of content, and all latest new stuff and everything we talk about will be uploaded. And for last but not least, we have a ConnectBooks certification. So for the ConnectBooks certification, for the listeners of this chat and for the listeners of when watching this, video, you'll be able to get a free ConnectBooks certification, which is a $199 value. We normally charge it $199. We're going to offer it now. We're going to send you along a coupon code, which will make it free. And once you are ConnectBooks certified, you understand everything, we'll give you a certification course, which that will help you, gain more clients. We can also send you clients. And I'm just saying this as I am looking for people who want to do bookkeeping in the e-commerce industry, because what happens is for me, sometimes people come sign up to ConnectBooks and we start talking to them and we see like, hey, they don't really know too much about accounting, or they're too busy. And we tell them, what, you just run your business and let's find a bookkeeper to, do your bookkeeping and get this all set up. And in that case, if we know you're certified by us, what we would do is we can send you leads and we can hook you up with customers so you can gain more business.
Yeah, I found that most of these e-commerce companies, the successful ones, they became successful way faster than they were able to organize themselves as a real business. So a lot of these companies, like they went out and they got the big warehouse, or they use fulfilled by Amazon, and they got their shipping manager, and they got their person that procures the product, and they have their internal web guy that does all the web stuff. But they never have a CFO, a controller, a bookkeeper, and they think that like sort of like magically all these things work themselves out, and that couldn't be farther from the truth. I mean, if you've been through this entire webinar, which less than 2 hours, but it's really just a small snippet of how complex this world is. And I can tell you from experience, I'm going to call it dabbling in e-commerce for the past 7 or 8 years or so, and without like having a friend like Nachman that I can text or email and go, what the hell is this? Where he can say, well, I've been there, I've seen there, done that. This is what it is. Like without really like working with other people or getting in-depth training or something like a certification, it's going to be very difficult for you to like sort of serve your first e-commerce client without having to do a whole bunch of trial and error and a whole bunch of just kind of figuring things out on the fly. And then your customer, on the other hand, do they know that you're learning? Are they aware of it? Are they okay with that? Or are they learning with you? Because this is an in-depth, like e-commerce accounting is an in-depth experience. It's really deep, and like I strongly recommend for you to join some sort of community. Can you go back to the last slide for a second? And what I'll do is I'll put Nachman email. I'll put the LinkedIn link to the group that he's starting on e-commerce, the ConnectBooks YouTube channel. I'll put links, all that stuff. But like it's really difficult to go about this thing alone. And I can tell you, like it's just very e-commerce in general. It's a huge world, and it's also ever changing. This screen that we showed you on how to do things, how to review the settlement in Amazon. A couple of years ago, it was much different, and then a couple of years ago, it was much different. And in a couple of months or a couple of years, the screen will change again. And the way they break down the costs and the fees and all that stuff, all this stuff is kind of changing again. So this is not something you just dabble in, learn once, and then you'll find. This is a ever changing, ever evolving thing. But one thing I could tell you is nobody's doing this. Very little. That's not like Nachman said. People call him, they want the software, and he's having a tough time even finding an accountant. Like he's giving away free customers, and there's no accountants because they just don't specialize in this stuff. So I got to tell you something. If you're looking for an opportunity and you want to stand out and you want to grab an industry that's growing super fast, that has tons of complexity and tons of job security, because quite frankly, not that many people have the patience to go through this, e-commerce accounting it is. So I strongly recommend for you to check out all these resources. Contact Nachman for anything that you're doing when it comes to e-commerce. You have a new client, you have a new problem, email him, and most likely he'll tell you, well, ConnectBooks can fix this, or no app can ever fix that, or he'll at least point you in the right direction. So I could tell you from experience, he would do that. So thank you very much, CP Academy, for helping us put the webinar together. Thank you, ConnectBooks and Nachman for sponsoring it and covering this content. And everybody, thank you very much for attending, and we'll see you on the next one.